Kia ora tātou, ko Dan Symons, toko ingoa, ki Westpac ahau e Mahiana, he Senior Manager Consulting and Insights ahau, tēnā koutou katoa. Good morning everyone, I'm Dan Symons with Westpac's Transactional Banking Team and Distribution Lead for Open Banking. I have the distinct pleasure this morning to be hosting us for this Westpac Smarts on Open Banking. So, why is there such a focus on Open Banking in Aotearoa today? Largely because it presents you and your businesses with the potential to drive innovation, enhance efficiency, and improve your customers' experiences by leveraging the data they hold at their bank. A really fantastic example we've seen of the power of data evolving in New Zealand has been Xero, being built on the ability for businesses to consent to the sharing of their transactional data held at their bank with Xero to automate business accounting processes and power an ecosystem around it, and performing incredibly well for tens of thousands of businesses for many years. Through today's session, we'll be covering off what is open banking in non-technical terms, what is the value to you and your customers, what is the value to you and your businesses, and what future value could open banking unlock. Hopefully today's discussion will provoke some wonderful questions from you all. Please post these in the Slido box to the right of your screen and we'll answer them at the end of this presentation, or if I'm sneaky, I might try and include some of them throughout the discussion. Lisa, if you could introduce yourself.
Kia ora Dan, and kia ora koutou. I am Lisa Ibarra. I'm the Head of Innovation at Payments New Zealand, and I'm fortunate enough to have spent the last couple of years working on bringing open banking into Aotearoa.
Wonderful. Thank you, Lisa. And now Dermot, please.
Hi, I'm Dermot Butterfield, founder of WYCH. We're a data intermediary. We make it possible for your customers and businesses to connect and share data and payments.
Fantastic, Dermot. And last but by no means least, Jeremy.
Tēnā koutou katoa, I'm Jeremy Muir. I'm a partner at MinterEllisonRuddWatts, a lawyer, and I work a lot in the financial services space and particularly around fintech and helping consumers access financial services through technology.
Atamaria team, and welcome. To kick us off, Minister Simpson raised a really great point at the FinTech Hui in March earlier this year around talking about open banking in terms that resonate with New Zealanders, rather than in technical terms. I wholly agree with this. I believe open banking is an ethos rather than a product, and we need to start talking about its capability and its functions rather than the term open banking. Research is also highlighting that customers in New Zealand have a relatively low awareness of open banking, but once it's explained to them, an incredibly strong preference to start using it. So I'll lead off with the first big question. Lisa, what is open banking? How would you describe what open banking is and what it does in a practical sense?
Thanks, Dan. Now, you've made a promise that it won't be technical, but unfortunately, what I'm going to start off by telling you is that open banking, much like our water mains or like cloud, open banking is actually infrastructure. So there's a degree of technical aspect to it that we would all want to understand. It's important to view it through the lens of infrastructure because as you'll hear today, customers, or you probably hear it on repeat today, customers are not going to be coming to you or I asking for open banking. They're not going to say, I want open banking. So they're not going to say, I want water mains. They're going to say, I want water. They're going to say, I want banking. They're not going to say, I want open banking. And I think that's really important. But in order to just share a little bit, I think it's important that we do explain what open banking is. So open banking is technology infrastructure. The technology itself is provided by the banks, and the banks provide this infrastructure based on standards so that every bank is providing the same infrastructure. Now, that infrastructure comes in the form of APIs, and I appreciate that APIs is not a familiar term for everybody, but in the promise to not get too technical, I'm going to just basically go into more examples later to see what these APIs do, and then from that you'll kind of gather it if you're not already familiar. These APIs are standardized, they're safe and they're secure, and when I say secure I mean financial grade security, so that any organisation that wants to use these APIs, the fintechs or any of the organisations on this call today, can use them and ensure that what they're using is going to be safe for Kiwi, safe for any customers out there who are gaining value from this. So today, open banking in New Zealand offers customers the ability to connect sort of bank feeds, connect to access customers' own account information held at their bank. And Dan's kind of already expressed how that works through Xero today, but it also offers the ability to initiate payments, and the access to open banking is controlled by customers, and that is absolutely crucial to what open banking is today. The bar that is set by open banking is very high, and that customers are expecting today and will receive informed and grant express consent to organisations who are going to take that responsibility of handling their customer account information and initiating payments for them. So what I'll do is I'll put this into context now. So you've heard of Xero, and Dan's already alluded today, the bank feeds that you enjoy in Xero, they connect directly to the bank, but what open banking does is it means that those bank feeds are now scalable and usable in the same sense as all organisations can enjoy that same streamlined, safe, secure access. And you've probably heard of Poly. Poly is the payment service provider that is a member now of the API Centre, and they are migrating onto open banking. And what that will mean when they migrate is you no longer have to use your bank password to initiate a payment anymore. And so with open banking, you will only ever need to use your password when you log into your bank and you authorise a payment at your bank. What I'll do is I'll just take you through the main ingredients of open banking, and I think we'll probably move on to talking about how it's going to relate to your business. But the main ingredients for open banking to be true open banking is that there are standards, so that all banks build their infrastructure in exactly the same way, that the bank has built the infrastructure for you, that anyone who connects to that infrastructure is accredited and is deemed to be safe and secure to access those APIs, that customers are there that are driving value. So whether it's the connection for accounting, tax, expense management, budgeting, home loan applications, there are customers obviously who are crucial and at the centre of open banking. And there are organisations like yourself or fintechs who create that value for customers. We're in a pretty exciting time in New Zealand with the regulator having approved the regulation for this called the Customer and Product Data Bill. This will put some regulatory minimums around what Aotearoa has already achieved. But it goes further than that. The Customer and Product Data Bill envisages beyond open banking. I thought I'll just take a quick moment to express that through an example. I think in this room, maybe yourself at home have experienced broadband switching. So there are 140 retailers in New Zealand that can switch your broadband for you straight through, streamlined. Your experience is that one day you were connected to service A and now you're connected to service B. All of that is built on what is essentially standardized APIs in the background that execute that instruction for you in a seamless way. That is one example of basically open telco, but you can imagine that open banking can be open telco, can be open energy, can be open health one day. So it's that safe, secure, standardized and regulated minimums that sit around customer products and services that are derived from those APIs. Was that technical? Not technical, Dan? Not sure if any one of my colleagues or my panelists want to kind of help bring this to light.
I'll lean in there a little bit, Lisa. I think there's a couple of things I'd love to stress. One is the customer consent piece. I think that is absolutely pivotal to open banking, and also the standardisation piece, because we have seen solutions that are open banking-esque, like online FPOS, that have been in the market for an incredibly long time. So one of the key premises of open banking is actually that the capability is standardised across all the banks, and what that allows for is far more scalable solutions, as Dermot will probably talk to in his scenario as a fintech. But also just that ability to co-develop as the standards are emerging. As we know what the standards are, fintechs and businesses can start building a state of readiness for when those standards are actually released into the market and can be deployed far faster than waiting for proprietary APIs to come out and having to deconstruct and integrate with those. Now, I think that's also that's a fantastic what is open banking, and I think it leads us really nicely into the why questions. And Jeremy, I'll probably look to you to sort of help answer the question, particularly given Lisa's sort of prefacing of the customer and product data bill around what benefits does open banking provide customers. What for the businesses that are on the webinar today, what are their customers thinking about when it comes to open banking? What's driving it for them?
Yeah, thanks, Dan, and thanks, Lisa. That's a great introduction. Just from a legal perspective, obviously, we can now talk about the Consumer and Product Data Act because the legislation has passed. So we are underway and counting down to banks, at least the 4 main banks, being up and running in this by the end of this year. And we're just waiting on some further regulations and things to sort of flesh out some of the detail. But yeah, we talked about the what. So if we talk about the why, really what this is about is the fact that in our sort of new digital lives, but even historically, banks in particular, but also other infrastructure institutions, as Lisa was saying, hold a lot of information that we've given them through our actions. So whenever we spend money, save money, take deposits, transfer money to other people, use the capabilities of banks, we're building a sort of data set of information, which is obviously relevant and of interest both to the banks, but also to other businesses and equally to us. And arguably as our information as customers, we should be able to access that and be able to get benefits from it. So what are those benefits? So for consumers, it's really about empowering consumers with greater control over their financial data and, could lead to several advantages. So more control, who can access that data? Can you make it available to certain fintechs or other companies or other banks who are providing alternative products, say, think of an online budgeting app or something like that, where they may want to draw information around your spending and saving activities from your bank or possibly from multiple banks. And the open banking framework, if that app becomes accredited and is able to draw that information with your consent and with the benefit of certain safeguards, will allow them to actually provide that service to you. So those, if you can think outwards from that kind of activity, any sort of activity which relies or can benefit from getting access to the data that is held about you by your bank or banks, or when we go down the track to your electricity company or your telco or something like that, is going to be available with your consent. So and this may allow for extra tailored personalized financial services, which are sort of tailored to your particular status and activities. Simplified financial management. It could give benefit of, for example, some kind of app or super app being able to give you visibility over information held about you in multiple places, multiple banks initially, but possibly even other types of information repositories as we go along. Potentially easier access to credit in the sense that lenders and other credit providers may be able to pull more information about you with your consent easily from banks in order to basically make a quick judgment as to whether you should be able to borrow money. Better rates and services. If you've got more people who can access that information and they're competing in a quicker and easier way for your custom, then you may be able to get better rates and better services as a customer. All of this applies to both customers who are individuals for their own consumer needs, but equally it applies to businesses who want to access the kinds of services and functionality you might take for granted now if you use something like Xero, but adding that into other areas of payments, sharing of information, access to credit and other things across different services. So for businesses, data-driven information and decision-making, you may be able to access more information about your customers and their behaviors in a way that will enable you to make better decisions or create a better strategy for building your business. Cash flow management, optimized payment processes, all of these things add together. If we go back then to the Consumer and Product Data Act, if you look at the purposes of that act, it says that the Act is to create a framework to realise the value of certain data for the benefit of customers and society, promote competition and innovation for the long-term benefit of customers, facilitate secure, standardised and efficient data services in certain sectors of the New Zealand economy. And it will achieve this by improving the ability of customers and third parties they authorise to access and use the data held about them by participants, and improve access to data about products in the sectors, whilst requiring certain safeguards and other things. So in New Zealand, we already have companies that are sort of using open banking type facilities and services. Dermot can obviously talk a bit about which as we go. Other companies like BlinkPay, QuickPay are definitely looking at some of these activities, whether it's loading money more easily into your Sharesies account, which is an area that I work in a lot. There are different ways that this will help us all. But I'm sure some of the other panelists would have views or could add to that.
Fantastic. Thank you, Jeremy. And I think Lisa touched on it a little bit as well. There's probably two forks that open banking will perform in. One is around life efficiency, making existing manual processes, both for the consumer and businesses on the call today, more efficient. And also in terms of innovation, new products and services will get evolved and powered by open banking. I think just in the interests of your nice little segue there, Dermot is someone that is often the custodian for the customer in terms of what you've been doing as a fintech. Anything to add to that from a customer benefit perspective?
Yeah, well, the one piece I'd put to the first piece about Lisa is open banking is a name we give to trust. Right? What we're actually asking for is customers to trust a business with their data. Until now, it hasn't been an issue. Businesses can acquire data any old way, but we're actually asking customers to trust. So there's a big piece there where customers are now in control of their data and their payments and associated pieces. And so in the first instance, those consumers are going to be looking for brands they trust. And so as a business that might be looking to consume some of the piece, you're going to be looking to build that aspect out for your customers. You're going to be showing them that you're a trustworthy piece. And that comes to the second part, which is because the customer gets really 5 controls over their data access, right? So it's all around consent. That is explicit consent. It's time bound. It's specific. It's purposeful, and it's non-transferable. So the way I like to look at it is your friend comes and asks you to borrow your drill for the weekend. That means they're going to take your drill and they're going to use it to put a hole in a wall or whatever it is they need to do, but it's for the weekend. It's not forever. They don't get to move into your house because it was only consenting to the drill's use. They don't get to use your car because it was only about the drill, and they definitely don't get to sell it or lend it to their friend because it's not theirs. Those same rules now apply to the data. And so when a consumer sees a business, they're going to be looking at it as in that same light. Is this a business that I want to give my drill to and let them have it going forward? And so from a consumer perspective, it's a great deal of control that they're gaining over their own data. And that gives businesses a huge opportunity to build on that trust piece.
Fantastic, Dermot. I think that's a really good summary. I like that drill analogy. I'm going to steal it and use it. Equally, I'm going to use Lisa's cloud analogy for open banking. Thank you. I think, if businesses haven't picked up that need to wed consent and embed this in the whole process, open banking is incredibly important, but also that fine granularity of who, for what, for how long is incredibly important in open banking as well, and the trust piece. To flip the perspective a little, recognising we have an audience of business people on this webinar, Lisa, asking you the question, and particularly with that lens you've had with Payments NZ and businesses and organisers like the likes of Dermot as a fintech, but equally customers that we have on the call today who are looking at how they can incorporate open banking into their payment experiences. What sort of benefits are they likely to see from integrating open banking into their customer experiences?
Thanks, Dan. Actually, I speak to some counterparts in Europe, and to you all on the call today, the real opportunity in open banking is actually not always that visible. So I love the way Jeremy made major points about all the things that I or you can gain from open banking. And we can measure that because we can see that in the market. Whereas what we understand from established markets who have implemented open banking is that there is a number of OPEX reduction opportunities that you might have as a business in terms of using your own data or using streamlined access to customer data to smooth your operational processes. So the way I think about opportunities for you as businesses, it breaks down into two buckets for me, a bucket of OPEX and a bucket of opportunity. So if you have anything on your strategy or anything on your roadmap that speaks to saving money as an organisation or reducing risk as an organisation or growing customer loyalty, then somewhere in the mix of those strategic intentions that you have, you may find that there may be an element of what you've been missing, which may be access to the streamlined data or safe, secure payment initiation. So we'll go through a couple of examples. Under my bucket of OPEX, the big talk today is, especially where I am anyway, is around privacy and data minimization. So when you have processes that ask your customers to download statements or send you information over email from their bank account, then there's a prime opportunity straight away to access these data feeds that customers like Dermot pointed out can put these constrained consent around and authorize you to receive that data in a standardized format. So no matter if they bank at Westpac or BNZ, that you as a company will receive your customers' data in the same format, which will streamline everything through your back-end processing. And the customer no longer attaches their statements to Gmail and sends them over to you, saving them down on their phones or laptops first and messing around, and you're not sort of deconstructing statements to make sense of different formats of statements for customer information. So there's a really big win there if you are accessing any customer data. Now, you may today be accessing that through bulk file uploads or some other form of integration with your bank. The big win then is the customer control that you put around it in terms of privacy, at making sure you're not over collecting, that you have exactly what you need. The customer has said how long you can have it for, and you can automate those privacy compliance aspects in the background too. So I'm a big sort of fan of the concept of a hidden factory in terms of our businesses that sometimes have this factory of costs that we don't see, that once you start targeting it, you become a more lean machine, so to speak. So there's quite a lot in that space to think about. So straight through processing, we've already kind of covered, but the one that often goes unnoticed is what this bank feed streamlined data can do for your own finance department and your own expense management and tax and accounting and compliance and the financial processes that you have. So you as an organisation may want to, and I'll use Dermot because he's sitting right in front of me, may want to engage or partner with something like WYCH in order to access your own account information from your bank and streamline that and sync it with your ERP systems and streamline your financial processes in some way and reduce cost. So there's quite a lot in the data management streamlining processes that you can reduce your OPEX for. When you think about opportunities, I think a lot of what Jeremy covered is really the opportunity for you as an individual, as a Kiwi, but also for your business in terms of saving customers time and producing experiences that are seamless for them. So the only one I will touch on that's in addition to that is really your customers presumably pay you in some way, shape or form, whether it's with cards, direct debits, or you invoice them and they type in the reference number into their mobile app and make a payment to you. And we all have fat fingers at time and do make mistakes. And I'm sure you have a whole task to reconcile payments and find lost payments, etc. With open banking payments, you can bring about the reduction in errors. You can pre-populate the payments so no one is typing in account numbers and invoice reference details into payments. And unlike DDs, you can provide a degree of transparency control over those payments. And as of 2 days' time, the banks will have implemented this thing called an enduring payment consent. And I know I promised I wouldn't be technical, but what it does is allow your direct account to account payments for services like subscriptions or your rates bills or your power bills. So you can have that, it's literally, as it says on the tin, an enduring payment consent. So I can authorize a company to manage my bills for me, my regular payments to my mobile phone, my regular rates bills, etc. And that way you're just reducing errors, saving time, giving customers control, and it speaks to your both saving time in your back end and saving time for your customer as well. Dan.
That's awesome. I think that data minimization is quite important because we often overshare, and I see that's also a resounding theme for digital identity as well, which is if I want to confirm my age, I don't provide my entire driver's license with you. I just provide something that confirms I'm over 18. And I think we forget that a lot of this data sits in email being exchanged by customers on the regular. I think the other piece that's incredibly important for the businesses on the call is this now gives you the opportunity to digitize some of those manual processes that often required your customer to pop out of the experience. And there was a risk of abandonment, the customer not coming back, or as you've touched on, coming back and making a payment potentially with the wrong metadata associated with it and creating some pain associated, trying to connect what happened in the session to the payment that's hit your bank account. I will move on to probably what is the big question, and I'll point to Dermot, an opportunity to be a little bit ambitious and visionary. We've probably got sort of about 4 or 5 minutes to answer this question, Dermot. I know you'll have a lot to answer here. The question being, as we look to the maturing of the industry-led and shift to the regulatory-led open banking position, what future value do you see, and have you seen open banking unlocking that we can enjoy here in Aotearoa?
Yeah, well, look, I think Lisa called out, ERP solutions for business customers. One of the pieces we've seen is that if, for example, you use Xero, you're going to get your data updated daily, right? If you take credit card payments, you might receive your payments once a day, right? That'll come as a bulk piece. If you use something like Stripe to do online payments, that could take weeks for that to reconcile and be delivered to your account, and it sits in their account in the meantime. So open banking removes a lot of that piece. So in the first instance, we talk about Xero type interactions. You can get near real-time access to your data. So you get paid, you can see that. You can mark that invoice as paid. You can also trigger requests for payment as such and ask the customer to pay. And then you get a notification when that arrives. So think about that connectivity in that flow. So you're able to know what's happening in your business in near real time, instead of once a day kind of updates. And you say tomorrow, okay, those 3 invoices that I expected to be paid yesterday weren't paid, right? You could tell that at any given moment by looking at some of the real-time services, and the costs are considerably lower, right? So you don't have to have a high cost for similar to those kind of paywave style interactions. You're interacting on a per transaction basis with the customer, and now soon to be with enduring aspects of it. So that means a customer can give you permission to take that payment every month. Imagine the ability to just engage with your customers and trigger the inbound payments for those pieces and leverage that kind of real-time interaction. That's massive. It's the second piece, and I think, Dan, you touched on it there a second ago when you talked about just sharing enough information from your driver's license to be able to identify who you are. Well, one of the benefits of something like open banking is the ability to onboard customers quickly. All right, so if you were to ask a customer to fill in a form and go through that process, they can make mistakes. They can also lie. They can put in information that you need to, in the background, go through and vet and individually verify those pieces, whether it's a consumer or a business that you're bringing on board. But connecting to open banking allows you to bring in that party information. Who are they? Do they own the account? You can validate those pieces, and you can use service providers, and there's a number of them who can help you access that information without ever having to see that information. So imagine the risk reduction so that you don't have to deal with having all of that information stored in your system. You can ask, is this Mary? And then get confirmation that it is Mary, and is this Mary's address, and get confirmation that it is Mary's address without ever having to pull in all of that data that one set. You know, similar to how we used to ask people to send me, a couple of PDFs with your name and address on them, right? You can do that equivalent piece in an API call as part of an onboarding process. And the joy is you don't have to build those pieces. They're out there for you to be able to consume. And then if you have invoicing with customers and they're looking for credit, you can actually do credit assessments on your customers by interacting with their accounts without ever having to consume their data. So you don't have to see their transactions. You don't have to see where they're spending their money. You only have to know that they can afford or swapping. So let's imagine going back to Lisa's scenario about swapping broadband providers. You want a bigger bill. They're going to say, hey, okay, we can do that, but can we see what you're paying on your existing one? They connect, they verify that you're paying for something right now. And they say, that's perfectly fine. You're low risk for us to come on board. We can get you in and online tomorrow. So those kind of pieces enable you to do this a lot faster. Excuse me. And so working with providers enables you to, apologies, I'm choking. Enables you to turn on a lot of features very quickly and be able to leverage those pieces now, because we have the benefit in New Zealand of jumping into this 6 years later than the first implementations in the world. So we have a lot of lessons learned. And so you get to jump to those compliance and identity and data handling benefits without having to build all those pieces. Right? We're coming with the pre-built Lego sections so you can build your business on the other side. And so think about it as streamlining, automating, reducing costs. Essentially, from a business perspective, this is the perfect tool set to turn your existing business into a streamlined system, and with the added benefit of building in trust. And that's the last piece I'll touch on. Because this is a trust-based system and you're asking customers to share their information with you on a trust basis, customers will only share information with businesses they trust. And so once you have that relationship with a customer, it's going to be very hard to break that idea of what we call it personalized interactions. You know their information, you know their Netflix preferences. They're not going to swap out a Spotify because they leave behind all of their stuff that they love, right? That stickiness can become part of your business interaction, no matter what you do. And that capability means that you get the ability to lock in that customer into a beneficial relationship for both of you. And you get to do it in a way that is really simple, streamlined, and cost effective, because it works with any financial provider. It works with any energy provider potentially in the future, or any insurance or any superannuation provider. So it's a huge opportunity.
Fantastic, Dermot. Lots of opportunity for, I guess, the businesses here to both, as Lisa touched on, sort of manage operational cost and efficiency and processes, but also opportunity to improve customer experience. I think that customer experience piece is quite a significant aspect of the benefit for businesses here. That probably ends the questions I've got, and we'll shift across to the questions from the audience, which I see have been coming in. There's probably a couple of questions, and Dermot, whilst you're kind of holding the microphone and someone that knows the technical integrations quite well, there's a couple of questions here around the how safe and secure are the APIs from things like or person in the middle attacks and fraud. And I thought, as someone that is in the process, who has done this overseas and is in the process of doing this in New Zealand, how secure are these integrations we're building between bank, third party, and fourth party?
So the example I'll give you is, this is the equivalent of the nuclear launch codes, right? Every interaction here is a two-key interaction, the customer and the provider. And so if you were to use our service, for example, we have a key. And if you are one of our customers, we have a key for you. And then the customer comes and gives their consent, which is the second key. Only together, turning those keys, does it activate the piece. And so man in the middle becomes impossible as such in that space, because at any given time you always need those two pieces of information to be able to go forward. So the way I look at it is, if somebody was ever to kick in a front door and steal one key, it's not enough to trigger the nuclear launch, right? It's as simple as that. And it's done in that intentional way to make sure that this is not like systems that have gone before, which are, single interactions where somebody gets a username and password and you can do whatever you want after that point, right? The idea here is this is financial APIs, or FAPI as they call it, an industry standard that's global and that is vetted and worked on across multiple different countries. So it's really strong. It uses the latest in technology pieces, and it's constantly evolving, right? So if you were to go into this yourself, you have to keep up to date with a lot of those pieces. You can use a service provider who does a lot of those pieces for you and comes with the out of the box, so you can jump straight to compliant and secure.
Awesome. Thanks, Dermot. And I think the other thing is this initiates inside the bank's ecosystem, inside their banking apps and platforms as well. So as Lisa touched on, the infrastructure is leveraging the security of the banks to construct that consent as well, which adds to that layer of secure upfront security. Jeremy, there's an embedded question within that fraud one that I might throw at you in terms of as we move towards regulation, how dispute resolution is managed. Have you got any thoughts on that sort of wider dispute sort of resolution aspect under regulation as we move towards the end of this year?
Yeah, I mean, there's going to be a few features of the regime with accredited parties who can access that. Will have to have dispute processes and things which people can access on a sort of person to business level. Obviously, if you are a business, you also have obligations to your customers. There's interesting integrations with the way this works with your obligations under the Privacy Act. So a request for information under this is not under the Consumer and Product Data Act, is not a Privacy Act request. That's sort of its own thing, but you still have the same obligations to tell people around how their data is going to be used and to comply with privacy principles. So that all applies. And then currently under the current regime, sort of the people that want to access bank information through APIs have the bilateral agreements with the banks. That will be more centralized under the statutory regime once that kicks in. In that case, it'll be about understanding the way the law works. Some of the devil will be in the detailed regulations that we're yet to see. So it'll be about just really understanding what it works, how it works, where your potential liability is, how that factors into, the insurance that you need and can obtain, and lots of good, solid, practical questions like that. I don't know, Lisa, from a sort of system design perspective, you've probably thought about this as well in terms of where some of those dispute and liability questions are likely to arise, are you?
We have thought about that quite considerably. I mean, I think right now we're in a transition from what you said before around bilateral agreements with banks. So any organisation here that wants a direct access to these APIs can partner directly with a bank under the regulatory regime. They wouldn't have to do that one-to-one bilateral partnering, and they would be able to get accredited and gain access. But actually where I've spent more of my time is in that fraud and safety space. So I think I might just segue back to kind of what Dermot was saying here in terms of the interaction between any third party in the bank through the API. As Dermot mentioned, it's kind of like that double key thing. The weak link in all of these fraud conversations is you and I. At some point when we are logging in to services that we trust, we need to ensure that we are logging into the service that we trust and it is legitimate. A lot of commentary is that open banking creates a safer space for us online, and that you have to get through the third party and the bank if you were going to execute a scam based on social engineering, which is harder than just social engineering me to give my bank password to you, where it's only one thing I have to give you, right? So we do need to be conscious, and we are very conscious in the design of the system around where the liability will have to land, but also we have to do more on customer education. I mean, everybody that is engaging with the open banking ecosystem now and into the future must be educating customers on what safe means for online.
Yeah. I think that last point there, I nodded my head and agreed, thumbs up with that one, that educating customers is a question I'll answer next, actually, which I think kind of, there's two questions. What are typically the three key areas a business should focus on when considering adopting open banking, and what particular segments of organisations should give this a high priority? For me, the key areas, kind of these meld together in a question. The three key areas I see is that the composition of your customer base, so B2C versus B2B. There is a roadmap. A lot of the current functionality is focused on one-to-sign accounts, so where a single person has the ability to share data or make a payment. As hopefully business owners on this webinar can understand, that when you've got multi-authorization, so two or more complex signing rules, that consenting process becomes more nuanced. So when you think about your customers, your customer composition will drive when you are looking to incorporate open banking, because that will also determine when you can drive the value from it. I'd also suggest alongside that, when your customers are having to make a payment to you or share data with you, and that's typically now for you a manual process, so high volume, say for example, of internet banking payments, so people want to pay you manually, so they're pushing you a payment, or conversely, as Dermot touched on, they're sending you bank statements or address validations, etc., that are often manual and outside of that digital experience. It requires them to go off and get a piece of information that needs to be validated by a trusted authority or someone so you know it's true and factual. And the third piece I'd say is educating your customers, exactly to Lisa's point. This is something that if we plug it in and just hope people use it, it's probably going to have really low adoption, because the trust curve that Dermot was talking about. Taking your customers on the journey when you introduce this and positioning it with them, it can be as simple as restacking the payment options. So the open banking solutions are first to get the benefit of the reduced cost versus other payment methods, etc. But educating your customers, and I'll throw a fourth one in there, and that is alongside educating your customers is also educating your own staff, because this will digitise some processes that are previously manual. So how your own team and how your digital staff, so your web real estate, educate your customers as well is incredibly important. So for me, those early adopters are particularly those B2C businesses where you've got lots of incoming data, or you've got lots of payments coming in. Those are the businesses on this call that really should be starting to think about open banking. I think we're almost out of time, but I thought before I wrap off, there's one question I thought that would be incredibly important to ask. And maybe for you, Lisa, if you could quickly rattle this one off in 20-25 seconds, which is, how many participants are there in the market? And is it difficult for a financial institute or someone to join the ecosystem, given you see that on the day-to-day within Payments NZ?
How many participants? Well, somewhat difficult to answer, but at the moment we've got 27 members in the API Centre. It doesn't sound like a lot, but actually I'll put that into context. We have around 100 or so organisations who have sort of self-identified as being sort of in the open banking ecosystem. Now, I'll use like a lowercase open banking on that respect, in terms of they're in some way associated with a need or a connection to bank feeds or direct payment initiation, and are candidates for using the services. Now, when I look around the world, I learn who have, other regions have open banking. 20 to 30% of those organisations have a direct connection with banks, a direct API integration. So they've invested in that direct connection and then bilateral partnering or regulated partnering. And the remaining 70-odd% go through a company like WYCH here, an intermediary, in order to access it. So they are still using open banking through an intermediary. So 20 to 30% means 20 to 30 companies in New Zealand may become members of the centre and then directly integrate with banks. And we're currently on 27. So some would say, geez, that's a lot. We are actually already at what would, back of the fag packet, estimate our market reach to be in the API Centre, and that all the remaining companies and organisations to uptake open banking will likely go through intermediaries. So we're doing very well. We're a year into a mandated rollout through the top 4 banks who have over 80% of the customer accounts in New Zealand. And we're screaming ahead with more milestones this year. We've got regulation coming on, which will make it easier and more streamlined for those companies to get access to those APIs. And we're soon going to come out with reporting from the API Centre on the customer uptake and usage sometime later this year. So you can see how well we're doing very soon.
And to that point, I think as we see the new versions of the API come out and the move to the consumer data, we'll see more mobilisation in this space from third parties, i.e. those integrating directly with the bank, and fourth parties, those integrating with the third party, such as WYCH, to get access to those APIs. We'll adjourn here to honour everyone's time. I think we're bang on 10:45. We thank you immensely for taking the time out of your day to join us. We all sincerely hope that we've provided you with value and answered some of your questions. Appreciate time as always our enemy here, and we may have generated some questions we couldn't answer. We welcome your emails at openbanking@westpac.co.nz. We'd love to hear from you, love to answer your questions, love to talk to you. Please also take the time before you leave to complete the survey on the right of the screen. We do love your feedback to help this session and inform future sessions. We will be posting a video of this up on our Westpac Smarts channel if you want to watch it again, or if you want to share it with any colleagues or friends. Thank you to our awesome panelists for joining me today. Sincerely appreciate it. Ka kite anō. See you again next time.